Peter Thiel doesn't see many IPOs coming from Silicon Valley this year. Thiel was one of the first people to invest in Facebook. He co-founded PayPal, sold it to eBay, and now he runs Clarion Capital Management, a hedge fund. Thiel says the idea is to avoid going public and focus instead on building a business before turning a profit.
I think we've seen a permanent phase shift towards a less active IPO regime and towards companies that stay private longer. If you're a CEO of a company, it is much less fun to be a public company CEO than a private company CEO at this point.
Thiel also took some jabs at what he considers the dated ideas of people like Warren Buffett and Nobel Prize-winning economist Myron Scholes.
We are still in a world which is dominated by value investing. It is dominated by sort of the Warren Buffett type model, which is you don't invest in spaceships going to Mars, you invest in Mars candy bars, because in the year 2200, when people are living on Mars, they'll still be eating Mars candy bars, even though spaceship companies will have come and gone. And we want to invest just in stable, predictable, mechanistic sorts of things.
Well, that's his mantra, but it doesn't necessarily mean it's the mantra for everyone.
Everyone is too strong, but that is the very powerful bias you have.
Thiel's comments were part of a panel discussion in San Francisco last night. You may remember he got a lot of attention recently for offering $100,000 fellowships to entrepreneurs under 20, provided they dropped out of college. Those same students might want to keep in mind Thiel's investment record. Since 2008, his fund's assets have dropped 90%. Still, though, in the latest issue of Bloomberg Business Week, Peter Thiel insists his goal is not to find the next Mark Zuckerberg. Instead, he wants to force young people to question what they're getting out of the college experience.